Hello, everyone, and welcome to the Adjusted for Risk podcast here from the shores of South Lake Tahoe. So, this is a big week for separately managed account managers as Zephyr announced the third quarter PSN Top Gun award winners earlier this week. It was obviously quite the quarter, it goes without saying, which makes winning the award even sweeter for those award-winning asset managers. The third quarter, it started off strong as equities rallied in July. They had that very strong bear market rally on hopes that the Federal Reserve would slow the pace of its interest rate hikes or even pause those hikes in 2023, based on concerns about slowing economic growth. Well, those hopes didn't come to fruition, and the Fed continued its uber-aggressive battle against inflation, resulting in both equities represented by the S&P 500 index, which fell 4.88%, and bonds represented by the Bloomberg Aggregate Index, which fell 4.75%, finishing the quarter lower. In addition to the Fed hiking rates, the ECB, or the European Central Bank, and the Bank of England also raised their key short-term benchmark interest rates during the quarter as global central banks try to tame widespread inflation. U.S. equities tumbled during the quarter after the Fed ended all hopes that the central bank may pivot from its hawkish stance and start to cut rates in 2023 during its Jackson Hole summit in August. The confirmation that the Fed will remain steadfast in its fight against inflation sent stocks lower during the second part of the quarter. Despite the risk-off sentiment, and this may come as a surprise to some, small caps, represented by the Russell 2000 index, outperformed large caps, which really should be a surprise considering the risk-off environment. Small caps, or the Russell 2000 index, returned a negative 2.19%, while the Russell 1000 index turned in a negative 4.61%. Additionally, growth stocks outperformed value stocks. So the Russell 3000 growth index fell a negative 3.37%, while the Russell 3000 value index fell a negative 5.56%. While the quarter was very trying for many of these asset classes, particularly on the value side, the small cap growth asset class was able to withstand the volatility and finish the quarter up in positive territory. Not much, but it was 0.24%. And that was represented by the Russell 2000 Growth Index. So when you consider all the troubles, you're looking at the war in Ukraine, much tighter monetary policies and no end in sight, particularly in interest rate hikes. And then you have slowing economic growth, inflation, stubborn inflation. To have Russell, or the small cap growth stocks, end up in positive territory, that's very promising. So here are some of the strategies that made up the PSN Top Gun small cap growth universe. Next Century Growth Investors, their small cap growth strategy finished up over 9% for the quarter. Granahan Investment Management's a small cap focused growth strategy. Again, they finished up over 9% for the quarter. Then you had Silvercrest Asset Management Group. Their U.S. small cap opportunity strategy finished well over 4% for the quarter. So fantastic performance there by those three small cap growth managers. And when you consider the tough environment, that's a great feat there. Moving along to foreign stocks. So foreign stocks, they experienced steep sell-offs or losses during the quarter. The MSCI EFI index fell over 9%, 9.29% during the quarter. And the MSCI Emerging Markets Index fell over 11% or 11.42%. Foreign stocks, it was not an easy quarter for foreign stocks. They were hindered by tighter financial conditions as the European Central Bank raised interest rates in July and September in its attempt to tame inflation. Furthermore, the euro fell to a 20-year low versus the US dollar, while the sterling fell to an all-time low versus the US dollar during the quarter. And to make matters worse, the potential for an energy crisis in the Eurozone increased as the Nord Stream 1 was shut down in July and in September. So the tighter monetary policies, rising inflation, and ongoing energy crisis resulted in increased fears about the outlook for economic growth in the Eurozone. So here are some of the strategies that made up the PSN Top Guns list for the EFI universe. The first one was Julex Capital Management, the Julex Dynamic Developed Market Strategy. Despite all the struggles overseas in developed markets and all the headwinds, this strategy ended up 0.3% higher on the quarter. Then you have Fiduciary Management of Milwaukee. Their strategy, their FMI International Equity Composite, finished the quarter down 4%. When you consider everything that was going on in the Eurozone and what the benchmarks finished, not a bad showing there for FMI. Then you have Burgundy Asset Management, the Burgundy EFI Equity Strategy was down 5.6%. And similar to the FMI strategy, sure, they were down, but when you consider everything going on in the broader developed market indices, not a bad showing there by Burgundy. So not only did equity volatility pick up during the quarter, but so did bond volatility as central banks continued their rapid interest rate hikes during the quarter. So as investors had to contend with tighter financial conditions and slowing economic growth. The Fed raised the federal funds rate by 75 basis points to 3.25% in September, which marked the third consecutive 75 basis point hike and the fifth overall through the first 3 quarters of the year. You know, it's not uncommon for interest rates to rise, but what is uncommon and what investors have to deal with is the steep rise of these interest rates. It is, unprecedented that the Fed has raised interest rates 75 basis points for the third consecutive time during the quarter. So that obviously that shock, especially when investors thought maybe the Fed might start slowing interest rates or maybe even pivot. They didn't. And that really contributed to the volatility we saw both in equities and fixed income markets. So it was that steep pace of interest rate hikes that caused the Treasury yield curve to invert further as 2-year yields rose from 2.93% to 4.23% during the quarter. That's a very steep increase in 2-year yields over that 3-month time period. Then you have the 10-year yields. While they rose, they surged also from 2.97% to 3.83% during the quarter. It wasn't nearly as drastic as 2-year yields, which resulted in that yield curve inverting further. The climb in yields was also evident in corporate debt as a steep sell-off in corporate bonds continued as the Bloomberg US Aggregate Index fell a negative 0.75% during the quarter. But what was surprising, similar to like US equities, where despite the risk-off environment, small cap growth stocks, which typically are more aggressive or riskier than large caps, outperformed. Similar in fixed income, it was high yield style or high yield bonds that outperformed your more conservative high investment grade or high quality bonds. So here are some of the strategies that made up the PSN Top Gun's high yield universe. LNS Advisors, their high yield fixed income product strategy returned a positive or plus 3% for the quarter. When you consider everything going on in fixed income markets, rising interest rates, the economic slowing, very impressive that high yield strategy can post a 3% return during the quarter. Allspring Global Investments, their U.S. short-term high-yield fixed income strategy posted a 1.5% return. Again, very strong performance in a very tough environment. And lastly, you had the PIN Capital Management strategy, which was PIN Capital Ultra Short Duration Corporate Income Strategy, which posted a 0.9% return for the quarter. So it's three very strong strategies there that performed very well considering a very tough environment for fixed income products, where most fixed income asset classes have experienced their steepest and deepest drawdowns in a long time, in decades. So that at the end of the day, I would like to send out a big congratulations to all the PSN Top Gun award winners for the third quarter. It was a very tough quarter, so take pride in achieving this great award from PSN and the folks at Zephyr. So with that, I hope you all have a fantastic rest of your week, and tune in next week for more insights from the Adjusted for Risk podcast, which you can find at our YouTube channel, Adjusted for Risk. And you can also find our insights at our blog, which is a wealth of insight from 6,237 feet. So with that, thank you very much and have a great rest of your week.